Hey everyone, welcome back to the Hub channel. We have an amazing show for you guys today. I have Rob Roy here with me. Obviously, Rob knows what he's doing, and this is going to be a really good show. Rob, how's your day been going? Obviously, you're going to be talking about the U.S. market and some other things. What do you have planned for?
Happy Friday to you, Brandon, as we swelter under the heat here in Florida. The market seems to be having a little bit of a problem with the heat as well, as we're backing off a little bit. We'll talk about that. We've got a few stocks of interest that I think people will be interested in, and I look forward to the Q&A as always.
Yeah, let's get to it. All right, I'll get you going on the U.S. market update, see what's happening here.
All right, sounds good. All right, so here we see the chart of the S&P, and as I was talking about, it almost seems like it's wilting a little bit under the heat. It's not just Florida. I know everyone around the country is having issues with the sweltering heat, but gosh, in Florida here, I played in a golf tournament over the weekend. I think most of you know I used to be a golf pro, and I literally got dizzy on the golf course, and then all my years of playing golf has never happened before, so it's some amazing heat going on. And it's pushing the market to the downside. We'll talk a lot more about this in the U.S. market update, but as you can see, the 50-day moving average is kind of about that 440 level, which is where I think we're going to go. We're about to close this gap here, which we had mentioned a couple weeks ago, a possibility, and that's going back to the 12th of July. So if we come down here, hit that 50-day moving average, fill that gap, find a little support here at 440. We'll see how the market handles that. Perhaps that's a point where we could get just a little bit of a bounce in the markets. It'll be really interesting, in my opinion, to see how we handle that level. So just kind of a more quiet day going on so far in the market. We've done these, pardon me, live market updates on a number of Fridays where things were okay, maybe to the upside, and then right after we finished the live show, the market tanked into the close. Does that happen again today? Well, so far we're in a really sideways pattern, kind of a symmetrical triangle pattern. I look at the 3-minute futures charts, and so there's a possibility that we get some sort of a move into the close. So we will cover that in the U.S. market update later. Did have a few stocks that I thought would be interesting to talk about, and then look forward to taking your questions as always. Google, they're just killing it right now in this market. The impressive thing to me about Google, you guys have been watching this for a while. I don't like these gaps. I hate it when things gap up like that. I'm always concerned about when the gap's going to get filled. We know through our data, we use AI to track the fact that 94% of gaps get filled, but the missing ingredient is exactly when those gaps are going to get filled. We don't know that. Sometimes they get filled immediately, sometimes it takes a while, but it's always in the back of your mind that it's a possibility. But after that gap up, perhaps it was this wave 4 correction here that's helped this. Because on the gap up, we've consolidated really well right above this resistance level of the wave 3. So that's becoming support now. And if we look at the 10-day moving average, holding above the 10-day moving average here for a bit over a week. So I'm pretty impressed with how Google's been handling this, and they're the leaders, and everybody's gunning for them right now. They seem to just be making money hand over fist right now and executing extremely well. Now, if we do go into a market slowdown, and we saw that chart of the S&P, now if we start to come down and break 440, I think a lot of other stocks are going to have problems with this as well. We're going to have a little bit of a chat about the bond market in the market update later, so and encourage you to watch that over on the EWO channel. But we're looking at Microsoft. Now, this one's a little different. It's not hanging in there quite the way Google is. And so this is where you start to get, when the market weakens a little bit, this is where the strong survive, right? And so clearly Google performing a bit better here than Microsoft. But I wanted to show Microsoft because it's one of the old guard. It's one of the old guard trying to become one of the new guard. And so they had a really nice run, and now they're creating their wave 4. We're right at a level of support here at 320. This is what I wanted to show you because we need to hold this 320 level if you're long Microsoft. If it doesn't, we're very likely coming down to 300. And if we get to 300, it would be hard for me to imagine that if we come that far, we're not going to come down and fill this gap. So that means a potential break of the 300 level. There is really good support at 280. So perhaps a stair step down if we don't hold 320. Now, we could easily bounce next week off of this level, move back to the upside, and no harm, no foul. But for now, I just wanted to share with you the importance of where we are right now in Microsoft. NVIDIA, you probably saw the negative report that came out that was saying that NVIDIA's best days are behind it. And, you know, that's one analyst's opinion. I don't know if I share that opinion. And the reason for that is not that I don't think this AI bubble thing is going to pop at some point in time, but I've talked about this a lot. I think the AI is going to, you know, the AI stocks that have been, you know, run to the upside, the Magnificent Seven, et cetera, on their AI news, is going to get to the point where it lasts longer than people think. And right about the time people start to throw in the towel, they're trying to short these stocks, and that's when things turn and go to the downside. There's a little bit of a pullback here, so that's notable. But look where we are, right at the 50-day moving average. We're still in an LA wave 3 to the upside pattern. And I know you're going to say it, and I see it too. There's that big old gap there. But remember, we don't know exactly when that's going to occur. Now, right now, the wave 4 tap box, and just for those of you that may be new joining us, that's a projection. It's called time and price projection. That does not mean the wave 4 is underway. It's not labeled yet. If it becomes labeled, that means the algorithm thinks the wave 4 is underway. If we get a labeling of the wave 4, it's telling us that's a likely area where we could find support. I find it really interesting that it happens to coincide exactly with filling the gap. So that's certainly something to keep in mind. I think the market would have to weaken quite a bit more than it has so far for that to occur now. We'll see if we get a little bit of a bounce attempt off this 50-day moving average next week. So those of you that are long NVIDIA, and I know a lot of you are, don't get too concerned yet. You've got a couple steps here of support with the 50-day moving average right here. Then we also have some support right through here at 400 with that big round number. After that, then it starts to get a little dicey. So you've got some room here. You got a little bit of a buffer, and we'll see if we can mount a bounce off that. I also wanted to talk about Coinbase because we had lots of questions on this live show before here on the Hub Financial Channel. A lot of people interested in Coinbase. We had it talked about in our insiders meeting last night, which is for all of our alert subscribers at evotrader.com. And I have mentioned on this show, as well as other ones that I do, that I didn't like this vertical move. You guys have been watching me. I know that we have some people that have seen this before. I hate vertical moves, and this is exactly why. It's a perfect example. When things go vertically up, they often come vertically back down. So I don't like that. But I said we'll have to see how far this retraces back down. But if you could get Coinbase back to 80, I think that's something that you want to consider for the long term. Still understanding that we have that halving thing going on with Bitcoin in the first quarter of next year. And I just think this has been a little bit of a gift that it's come all the way back down to 80. And if that scenario plays out, if Bitcoin takes off and begins to run, it's certainly going to pull Coinbase with it. So for those of you that have some speculative money out there, play money if you will, that are looking for some sort of a good speculative opportunity, I think this is a really good one. Now, if it breaks 80, all bets are off. If it breaks 80, I think that's your stop. But we're close enough now that I think you could give it a shot. So, Brandon, that's what I had prepared. And if we've gotten any questions, I'm happy to take those now.
Yeah, we actually have some really good questions already. So this is the Catalina. It says, could we please check out, it looks like SMCI, Meta, and NVIDIA. And so you already hit NVIDIA. Maybe a couple of those other ones there for you, Rob.
Yeah, that's good. The Catalina knows that we try to limit it to 2 symbols, trying to sneak one in there.
Oh, Catalina. Well, I guess NVIDIA got taken up, so I think we're golden.
Yeah,
She got lucky on that one.
All good there. All good there, yeah. So, yeah, this one is, it just had a heck of a run. And then, you know, a bit of a move back to the downside on its earnings report, as you can see. Let me take that bottom stuff off, but and we'll spread the chart back out. And there you can see the little E for the earnings. But when you have a stock that rallies like that and it hits a 61.8% fib level, in my opinion, the strongest of all fib levels. So you had a bit of a vertical run here, one heck of a run coming out of the lows of May, as you can see. So we get this big, massive run. A lot of good stuff is priced in. You know, they make the stuff for AI. Pretty familiar with this company because I've got my eye on it. My disciplines would not allow me to chase it, even though we had a really good zigzag pattern here. And that was hard for me to pass up. As you all know, that's my favorite pattern. And so that 100% extension is where we were supposed to go. And see, we overshot that a little bit. So really getting a bit overbought. So my point here, the Catalina, is that this gap down, I don't think is anything to be concerned about. It's a bit of profit taking following a run that just got too vertical. Now we're in an area somewhere between right here, 260 and 220. We should find support right in here. If we don't, then unfortunately we have to start talking about, gosh, could we come all the way back down and fill that gap? I don't feel at this point in time that that's warranted. I feel like we are going to find some support here within the next 20 points or so. And at that point in time, we could look to move higher. But with a wave 5 that doesn't go past 100%, as you know in Elliott wave rules, the retracement is back to the previous 4. And that's one of those levels I was talking about that has not only the wave 4, but it has some support. So it's pretty strong move to the downside. So there's been some significant profit taking here. And it may kind of back and fill and slowly work its way down towards that 320 level. But just like I said with Coinbase, if you could get an 80 handle on Coinbase, that's a buy. I think if you get 220 on SMCI, that's a buy. Then if it breaks 220, that's your stop. You're out. Wait and see if it's going to come down and fill this gap, and then look again at 160. And I just don't feel that in the market environment that we're in now, that's warranted. I do feel that some of this move down was because it just was too vertically to the upside. But you're on a really good stock here. Keep an eye on it. Watch those levels that I mentioned. And yeah, I think you can do really well on this on the long term.
Hey, Rob, don't worry. It looks like the Catalina did give an apology in chat. Said sorry that she gave, or he or she gave 3 symbols. So I think we're okay there. So thank you so much, the Catalina. No big deal.
No
we
worries,
did cover NVIDIA already.
Yeah, no, but a committed watcher, so all forgiveness. So
all forgiven. We do have another question from Lisa SH. Can we look at CROX? CROX. Let's check that.
Did we get the Catalina's second symbol?
Oh my gosh. Looks like SMCI. So Meta SMCI Meta.
Meta was the other one. You told me that. That was my fault.
Let's do Meta and then CROX.
Didn't want to scold that much.
No,
like,
we don't.
Get one
we only give you one signal.
Yeah.
Good point.
Now Meta's a whole different game here. Yeah, Meta's a whole different game here, and for whatever reason, where all of the analysts were just so angry at all of the metaverse chat that Meta was doing and focusing on that, and they were focusing on the amount of money they were spending, and man, did they punish the stock, breaking below 100 back in November. And then the analysts fell in love with them again because they started focusing on their earnings, on more of their core business, which is done really well. Surprising to me, because you feel like something along those lines is starting to mature. They have branched out, as most people know, done a really good job in their acquisitions, I think, made some really smart moves there. And the fact that they are more focused on their core business and not talking about the metaverse so much anymore, they've gotten some love again here with just the ideal. This is what you want to see. You know, I always criticize the vertical moves. The 45-degree angle move is what you want, because when you get a trending move like this, you do have corrections. That's the crux of Elliott wave. The market moves in impulses and corrections. But when you get a corrective move and a 45-degree angle, it's not as severe. And that's what you see here. There's some corrections along the way, but they're not very severe. And even up here, on the earnings report, It wasn't a very severe move, had a little bit of a gap up. Now we've come back and filled that gap. I think that's really attractive. Now, the only key here, the only negative that I could say with Meta right now is that they're right at one of those big whole numbers. So they're right at 300. I think we talked about this a while back when it was trending to the upside back in here in early summer, that hard to imagine it not going to 300, because I talk about the tractor beam effect, the old Star Trek days where those big round numbers tend to just draw the stocks there. Well, we did that. We broke above it. We gapped up. We filled the gap. And so far, we're sitting above that 300 level. As long as we can hold this level here, somewhere around 3, it doesn't even have to stay at 300, because there's good congestion right through here around 290. So if we can stay in the look where the 50-day moving average is as well. So another one that's in a wave 3. And so if we can stay in this level between 290 and 300, do a little bit of bagging and filling consolidation, I think Meta could be ripe for another run. I don't see that one as a short possibility yet. There are some others that are kind of short candidates, but Meta's not one of it at this time, in my opinion.
Okay, so we got Meta taken care of. It looks so. This was the one from Lisa SH. She just wanted to look at CROX.
Oh, there's one I haven't looked at for a while. CROX. Gosh, you're spot on. The kids are back. I think at one time it was more geared towards adults, but now school kids. This is what they all want. They all want these CROX shoes. It's amazing to me. So it's
they've done.
It's,
and have you seen this, Rob? So I have a whole bunch of kids, and I don't know if you know this or not, but I have a whole bunch of kids, right? And they've all of a sudden, you're exactly right. This is a trend for these kids to get the CROX now, because they have those little holes, and they've come out with these accessories that you can go buy on Amazon. So we've spent hundreds of thousands of dollars on these accessories that you can now put in the CROX. The kids love these accessories, so they're taking off like wildfire. My wallet is hurting.
Yeah, I can imagine. And luckily, my kids are older and past the school days, and they're not really even talking about these. But I know, from hanging around middle school, high school age kids, they all want them. And so I guess you're kind of filling in the blank there. You can personalize them, right, with all the doodads that you can put on there. But it is amazing. I just thought this stock was, and the shoes were kind of a fad that had gone by, and maybe there's a few older people that like the comfort and stuff, but to get the young people back on board, they've done a good job, whatever they did to attract them. And who knows, what sparks kids' interest. But you know how the whole thing works in schools. You've got a lot of kids, Brandon, is the fact that they got to keep up with the Joneses, right? With my kids, though, it was Air Jordans. So I know how your pocketbook feels. Looking through here to get back to the stock, it's at a really important level. If you're not long this stock yet, I think you've got a pretty good opportunity here. So from a risk to reward standpoint, as long as it stays above 100, you might have a really good entry. School starting again. I think the next quarter earnings, which is here in the beginning of November. So, if it's the kids that I'm familiar with, and I've got some cousins and family members that I help out, so probably not to your degree, but that's what they all want for their back to school gifts. And so I think the next quarter, what I'm trying to say is the next quarter is probably going to be an upside surprise. We've got this gap up here. I think this is a really good one. Awesome question. And as long as you stay above 100, I think you're good. Even if it were to break 100 a little bit, there's a lot of congestion right there at 95. So I'm going to kind of go with that same route that I just did. I think if we can stay in the 95 to 100 range, you stay long. Now, if it breaks 95, all bets are off. That's your stop, because this move up here from 75 to 95 was completely vertical. And that'll be retraced in a heartbeat. So you have confidence in these levels. If we can stay between 95 and 100, I think you're long this stock going into that next earnings. So a little bit of a position here, waiting for November 1st. But it break 95, that whole scenario changes. But yeah, wow, what a fun one to talk about. Great question.
Good deal. So the next one we got is from Tommy Pham. Wants to know about PANW, PANW. See what's going on there.
That one gets asked about a lot. I don't know if it's him that asks about it, but it's it's a stock that I really look at, and the cybersecurity stocks took a hit. S did, Security One, and I forget off the top of my head which one of the cybersecurity stocks had a disappointing earnings report, and so the whole sector got hit. And so that's what you're seeing there, because their earnings report is on the horizon. Here's another one that I think if you're long, maybe you want to add to it going into this earnings report. Hard for me to imagine, it seems like more of an individual company execution issue that they had rather than the world seems like it's going to need more and more of this, right? This is it's just going to be the way the world works with cyber attacks, etc. And Palo Alto is one of my favorite ones. So 200 is your level here. If you're long, I think I would add to it. If you're looking to get in, maybe put on like a half a position, and if it does make its way down to 200, it's a little bit oversold right now. If it makes its way down to 200, I would add to it. But you don't have much time here because the earnings report is on the horizon. So maybe we don't go real heavy on this because there is a precedent of another cybersecurity company that disappointed. But you could also get a massive move to the upside here if they come in and show that it was a company specific issue and Palo Alto is executing well, which in my opinion they tend to do so. So I think you got another good speculative position here. I just wouldn't load the boat, back up the truck, whatever old expression you want to use. But I would want to be in this space at least in some sort of a participation.
Yeah, I like that. I like that. So Will's coming in here. He wants to know about XLE, but he also has this comment here. I knew I should have bought puts on Coin Drat. And obviously, I think this is one of those things where we saw that chart shoot up, the coin chart, and you already went over it. But this coin thing was more of a buy the rumor type, sell the news, where we had the BlackRock thing come out simultaneous with the SEC ruling on XRP and some other things. So obviously, that's why that chart shot up. So for me, and even looking at your chart that you showed a little bit ago, that was a very easy sell the news type of thing. You know what I'm saying? So yeah, right. I wish you would have bought puts on that as well, Will. But anyway, let's check out XLE.
Yeah, and Will, don't feel bad. I had a question last week or the week before on DraftKings. Someone was wanting to short that one, and I just felt like, gosh, we're just starting football season. That's the moneymaker for all these online betting services, and I just couldn't see shorting DraftKings at this point in time. And then it did go down, so I was wrong on that one. But on Coinbase, now, I'm not going to pat myself on the back and say I was right on that. I believe I'm pretty confident that my comments were if you could see 80. I did think it was going to give back some of that vertical move, and if you saw 80, that's almost like a gift and a great opportunity. So perhaps you could have gotten a short-term short in there. There's no way I would have shorted that all the way down to 80 because you just didn't know for sure it was going to go that far. So yeah, I feel your pain, Will. So the XLE is performing really well. Let's see what's oil doing today. Oil is kind of flat. We'll talk about the USO in the market update over on the EWO channel, but oil is right against resistance there. The USO is at 75, so it's holding steady today, and it's had a nice run that's being reflected in the XLE. But you can also see here that even though that's a really darn good looking wave 3 to the upside, it looks like the DMI might just be getting started here. That's kind of building into, you got the negative directional indicator going down, the positive going up, you got the ADX moving to the upside. All that looks pretty supportive, but I think for this wave 3 to continue and for the XLE to break above this area here around 90, 91, you're going to need the USO to break above 75 and head towards that 80 level. That DMI suggests that that's a distinct possibility. So for me, Will, right now, I couldn't go long at this point in time, but a break above 91, and I think we may be off to the races here, which would not be fun at the gas pump and all the other electric bills, everything else. But if we break above 91, yeah, I think that wave 3 continues. And as I said, the DMI is suggestive that that could happen. So let's watch 91 and see how it goes, and chat again next week.
Okay, I think one of the last questions here is Manuel Costa wants CELH and SARK. So I guess SARK, is that the inverse ARK? Yeah, CELH.
Yeah, that's Celsius. Brandon, you're going to have to give me one at a time. I don't have the mental capacity to remember both symbols at once. So.
I'll try to remember them.
The days are ticking away, which the golf course reminded me over the weekend. So I'm getting older, so I got about enough mental capacity to focus on one thing at a time. The problem here with Celsius is, awesome earnings report, and look where we are. We've nailed that Wave 5 tap box, and that's why we're such believers in this software, the HUBB Financial Software. HUBB.com. It's the greatest Elliott Wave software that exists, in my opinion. There's a number of them out there, but a lot of them have personal adaptations of Elliott Wave. This software here is directly programmed from the algorithm that Ralph Nelson Elliott himself wrote. And so I've read all of his writings, just his musings, not just the technical stuff. I feel like I'm pretty good on Elliott Wave, and I'm fully convinced this is the best Elliott Wave software that's out there. So here we go. We have a projection, and look what happens. You get a great earnings report. Where does it go? Right smack dab to the middle of the tap box. Now that's the problem. So we've had a big gap up, and we're at a potential target. I think we need to have some backing and filling. I don't know that this is one that I would do a short on. We are looking at a potential move with the doji there from yesterday. We'll see how that plays out today. But going through and looking at this, the low of the day on the 9th was right there at 160. There's a possibility that we come back and test that level. I'd be surprised if it gave it up. So I'm not really thinking that this comes out unless we get a really, really weak market. I mean, if the market really rolls over, we go into a much bigger recession than people are thinking, and we have a rough next quarter, I think we may hold in here. I think we bounce around a little bit. Maybe we come back down to 160. A lot of times we seem to bounce in this trading range because for whatever reason, the software algorithm finds this is like a margin of error, with the midpoint being the target, but it may only come to here. It may go up to here. So I think we see some sideways move. In fact, if you're looking for some sort of a sideways trade, I think you may have a good opportunity here in consolidating the gap up, and it has history of that too, because look what happened here before. You had the big gap run to the upside, and then you went sideways for a while. I got a feeling that could repeat itself. So if you're looking for something sideways, you might have found a good one here. And like I said, Brandon, I don't remember.
No, you're good. The next one is SARK, S-A-R-K.
Okay. Taking a look at, we're right at the 38.2% wave 4 corrective move here. So we kind of have to wait and see how that's going to handle things. This is a pretty darn classic Elliott Wave pattern to the downside. Now, the problem is when the wave 3 is over, which it is because the wave 4 has labeled, then you have to figure out how far does the wave 4 go and how do we target that? We look for fib levels because those are the likely areas that it's going to run into resistance. Well, it's at one now. It's right at the 38.2% fib level. That could hold. We got to watch this one. This one needs to go on the watch list. And see if we start and turn back to the downside. If we do, then I think you got a really good short down there to that wave 5 forecast, somewhere around 27, 28. But even though the 38.2% level is a fib level and it has some strength to it, it's nowhere near as strong as a 61.8% level. And you have to take a look at this chart and realize that there is a ton of resistance here at 40. So we could actually climb all that way back to 40, and that would be right around a 50, 61.8% corrective move. And that's when I would start to think, okay, now you go short. So I think we have to put this one on a watch list. I can't even really give an aggressive type of move that you would want to make right now. So I would put that one on your watch list. Keep an eye on it. Let's see if it turns back from this 38.2% level, if we continue to climb, or what ends up happening here. But yeah, pretty interesting chart, and just a very classic looking pattern at this point in time to the downside.
Oh yeah, yeah it is. Why don't we go ahead? Let's go ahead and wrap this thing up on Disney. If you could go over Disney really quickly before we end this thing.
A good one, and kind of near and dear to my heart, Brandon, living in Central Florida, not that far away from good old Walt Disney World. I have the distinction of having gone to Walt Disney World the first week it opened. My parents took me the very first week Walt Disney World opened. Nobody knew what was coming there. It just sounded like something fun to do. We actually had a wooden brick. Now I'm dating myself, so I'm going to stop talking about that right now. But I actually think Disney looks really good. For those of you looking for a longer term position, we have a couple subscribers at evotrader.com that are always looking for leap candidates. They want something that they can use options to replace buying the stock but go way out in time. And I think Disney follows that bill. How much negative news can be priced into one stock? Everything is going against them. Streaming service isn't doing well. The parks, because of all the political stuff, aren't doing that well from what I hear. Now, the heat may have something to do with this as well, but what I hear is that the wait time on rides is 15 to 20 minutes. And if you've ever been to Disney World, you're usually expecting a 2-hour wait unless you have one of those express passes. They're just not necessary from what people are telling me that have been there. Then with the streaming service struggling, we got the writer strike in Hollywood, so there's no new content coming out. So it's like everything bad that could be happening to one company has been happening to Disney, and yet it couldn't break below this 85 level. We wanted to see how the earnings report came out. Well, it was awful, as everybody expected, but they were smart enough to use the magic words. They started talking about how they're going to use AI in their strategies, from marketing and applications, etc., moving forward. And I was actually happened to be watching that stock after hours live. And as soon as the conference hall came on and they mentioned those words, it shot to the upside, and that held into the open the next day. So we're at a little bit of resistance here at 90. So maybe we come back down a little bit. We could even come back down to the 10-day moving average, because we're still, even with a little give back today, a little bit overbought from the 10-day moving average. But I do feel like if you're looking for something longer term, and just hard to imagine anything else negative that could be said about them, couldn't break it through 85. That seems like a floor to me. Now, you may have to be patient on this one, so this would be more of a leap candidate, something going further out in time. But yeah, instead of going out and spending all the money to buy the stock, you buy a leap call a year out or so, and I think as we start to approach that expiration, you're going to be pretty happy with that result. So yeah, interesting. So we covered a whole range of things, Brandon. We had short-term moves, we had speculative moves, we had watch list moves, and now we got a long-term play. So what a great session this was.
Yeah, it's nice to hit the whole gamut when we go through these things, Rob.
Yeah,
that was a great show. And obviously, thank you guys
right.
all for coming to the show. This was a really good one, and thank you guys for the questions. I'll let you go ahead and end this out, Rob.
All right, yeah, I just wanted to add my thanks too, and I love the group that we have that comes and visits with us every Friday. Hopefully, you all like it. You ask wonderful questions. It makes it so much fun for me to get some stocks that we don't usually look at day in and day out. The popular ones that everybody wants to look at. We get some interesting ones, and it just gets my juices flowing. I really like it when we do this. So hopefully you'll share this with some of your friends, and we'll grow this viewership and make it a lot of fun week in and week out. Thanks, everybody. Appreciate you tuning in. Look forward to talking to you again next week. Take care.